back. You're watching Indian Open right here on BloombergQuint Live. A quick glance across Asia will tell you that we are in for a softer start. So you've got Japan, which is trading under by about 2%, Hong Kong, which has got cuts of about 0.3%. 0.75% rather, and SGX Nifty, which looks like it's flat, but remember we have to take into account two sessions of trade that we missed out on yesterday's session as well. And keeping in mind how the global markets are faring, it doesn't look like we're going to have a really great start this morning. Good morning, Neeraj. I mean, lots to watch out for on Friday and Tuesday's session, and particularly the last 1 hour of trade was in a way action-packed because we saw the Nifty seeing so much volatility after slumping almost 2% to then coming back and rescaling those levels. So lots to watch out for.
Lots to watch out for, but just the world is not such a happy place. The last 2 days, the US markets have had a steep correction as well. So I don't know if, even if there was a bounce that could have happened otherwise today because of the last 1 hour trade, Indiabulls, RBL and all the susceptible names coming up, the world doesn't seem to be a happy place, and that might keep a lid on any kind of optimism.
But Indiabulls Housing Finance, an interesting one is how it actually managed from being down 10% on Tuesday's session to being up 10%, by the end of it. And then you have some positive news about prepayments of masala bonds that we just received from Indiabulls Housing. So it's going to be an interesting watch to see how that stock opens up in trade. But also let's take a look at what's happening in the derivative space and how we are set up. Remember, today is Thursday, weekly options expiry. Navneet is joining us with more details. Navneet, good morning.
Good morning to both of you. Well, it's going to be a catch-up game for Indian markets considering we were closed yesterday, and as per the levels we are staring at a gap down opening of about 80 to 90 points, and this will give you that picture. The Nifty futures closed at 11,429 on Tuesday, and SGX Nifty currently trading around the levels of 11,350. So it could be a gap down opening of about 80 to 90 points in trade. What happened on Tuesday then? Nifty futures, they were fresh shorting seen because you did see the open interest going up by about 5%. Remember, throughout the series, since the time October series has started, the premium has been on the higher side, so the premium closed at somewhere about 70 points. The day low was about 11,250. That also happens to be the 200-day moving average, and from thereabouts there was some recovery seen. So on the downside, you can watch out for the 200-day moving average of about 12,250, which happens to be the low of Tuesday as well. Pull up Bank Nifty futures, fresh shorting seen for that as well, as open interest rose as much as 13%, though the premium came off from 200 points to 150 points, and this one too, the low was somewhere about 28,000, and currently if you look at the underlying Bank Nifty, it is hovering around the 200-day moving average of about 28,700. So that's a key level to watch out. Once again, with markets falling, India Volatility Index spiked, and that did rise by as much as 5 to 6% in trade. That's not a comforting sign for the bulls. 16.7 is where India Volatility Index closed. Very quickly then, today is the options expiry day. What levels to watch out for Nifty? Of course, watch out for 200-day moving average of 12,250. This is the distribution. 11,600 is the strike where maximum open interest on the call side is. But what happened on Tuesday was more of call riding on the 11,600, 500, 400, and we are somewhere about 11,350. So on the downside, 250. On the upside, probably you can watch out for 50 to 100 points higher from current levels. Stock futures, a lot of stocks were in focus, and especially the banking stock. Shorting seen for Yes Bank. Open interest was up about 20%. IndiGo Bank also saw fresh shorting coming by. BPCL saw short covering a counter which was up 5% in trade, and DLF did see some bit of long unwinding in trade. FI sold on the cash side, but if you look at the data, they're still net short, but the positions were added across the board. On index futures, you did see longs and shorts being added, and whereas if you look at the index options data, they've still bought more of puts and written more of calls, so the positioning seems to be on the short side. With that, it's back to you guys.
All right, Navneet, thanks very much for that. So we'll keep an eye out on all of that. But let's also bring in our market experts. Parthiv Shah, director at TRACOM Stockbrokers, is joining us on the show this morning. Parthiv, thanks for being here with us. Did you get a little perturbed by what happened on Tuesday and what's been happening for the last few days, where the volatility has been immense? It's very difficult to gauge in terms of the index move on almost on a daily basis. But now, while we have seen that big jump post the corporate tax cuts, the structure finally starts to fail again.
Good morning, Devina. So yes, certainly. I think the benefits of the tax cut and all the talks regarding that, and also knowing now that the MAT credit is not going to be availed by somebody who opts for the lower tax bracket, I think is something that probably is putting the markets on aside. See, I think, yes, tax cuts are always a good thing. And I'd even mentioned in the past that the benefits of it will percolate on a longer run. It's not going to happen like a V-shaped recovery, because eventually I think we know for the fact fact that tax cuts don't do anything in terms of immediate impact on higher EBITDAs, operational profitability, and more importantly, immediate perk up in demand. So I think markets will certainly stick to the reality. And currently, I think the reality is that we are going into a quarter 2 season where we know for the fact that the results are going to be terribly bad. We got the GST number. The GST number was really bad. I think in the sense that we were talking about having a run rate of not less than 1 lakh crore after the recent momentum that we'd seen in the GST collections. And now this is a number which is surely shortfall of all the estimates. So I think the markets will also be slightly worried in terms of trying to trust the government's intent that they've talked about the H2 borrowing to be stable. But I think looking at the finances are and the revenue collection for the governments are, I think it's going to be a fact that, we might slip in terms of the fiscal deficit number. So I think these are multiple things which are keeping the markets on edge. Plus domestically, we have lots of banks which are showing huge gyrations, likes of the NBFC's Indiabulls Housing Finance, second largest housing finance company, Yes Bank, of course, always in the news. And even the global, I think, setup right now is certainly seeming to be very volatile. So I think the goodness of the tax cut news already is factored in. Now I think the markets will work on how our fundamentals of our companies in terms of better earnings change. And trust me, this is still a market where there's a huge disparity in terms of the quality companies whose valuations are still up, likes of Kotak Mahindra Bank, likes of Asian Paints. And then there are these companies which are hitting 52-week lows. So investors will have to really be extremely careful in trying to have the right set of companies in their portfolios rather than trying to find names which are at their 52-week lows and thinking about how low it can go from here.
Right. All right. You briefly mentioned Indiabulls Housing. I mean, they've been, trying their best to make sure that they can shore up investor confidence. A lot of prepayments that they have done. They had also conducted a buyback some time ago. I mean, the stock, however, in terms of confidence, is not something that we're seeing. The stock has been down over the last few days. Yes Bank is the other one, obviously right now an untouchable. But what could lie in store for both these names, Yes Bank and Indiabulls Housing Finance?
See, Devina, to be very honest, I've always given more weight and importance to the movement that happens on the screen than my own analysis, because what happens is something is certainly there in these two companies which is the market aware of, and I think there are no much buyers at these levels because Indiabulls Housing did show some sort of intraday sort of recovery, but then this is a stock which is corrected from heights of 1200 levels. And I remember the past of this company. I think their dividend track record had always been fantastic, and dividend is always real cash. And despite all the positive arguments that one might want to put for Indiabulls Housing, the current price, which is at around 280, 260, does show that there's a lot of panic in this name. And all the political chatter also in terms of Mr. Subramaniam Swamy talking about suing this company does not bode well for the sentiment. And I'm just keeping my fingers crossed. This by no means is a small company. It's the second largest housing lender. We saw what happened with DHFL. The real estate sector is in big doldrums, and with these companies being out of the lending spree, the developer loans are totally out. So it's going to be a terrible mess if something were to go even further negative for Indiabulls Housing Finance. So just keeping fingers crossed that things improve from here. But certainly I think very, very risky traders might want to chip in, but otherwise I think for investors these are not the type of stocks. Even commenting on Yes Bank, today's conference calls, they revealed that finally Mr. Rajat Munga is out, and that was something anticipated. The key question and concern was why did the risk officers and lot of credible management names exit this stock? Yes, the management always say it was due to some personal reasons, but that does not reinstate the confidence. Maybe today the overhang of the promoter selling might be over, as a result of which we might see some sort of relief rally. But yes, one will really want to watch for the couple of quarters in terms of the numbers, how well they deliver, whether they are on track with what they're guided for. Very difficult scenario out there in Yes Bank as well.
So Parthiv, quick 30 seconds. You would not touch Yes Bank, I presume, despite the fact that the promoter selling would extinguish today, or has gotten extinguished now.
I'm getting a lot of queries, Neeraj, in terms of a lot of my clients asking what's wrong at 30 bucks, should I buy it? I am just telling them use it as a call option with unlimited expiry, and the maximum loss you can have here is 30 rupees.
No, so okay, you're saying that it might be a good not a punt really, but a good trading call to make. Buy it at 30 rupees because that's the max that you can lose, and maybe it could go up. Is that the call?
Absolutely, Neeraj. If at all there were any signs of turnaround, this can be very rewarding. So yes, even on higher levels, it was looking very good. But anybody buying into Yes Bank should buy only that much quantity, the amount of risk that they can manage.
Well, it's an interesting way. And again, I'm glad Parthiv is mentioning this. This is for the high risk investor who's a bit of the trading mentality as well, that you buy it with a presumption that this money would go.
Not for an investor, but for a trader.
Yeah, not for an investor, but for a trader maybe. But hey, at 30 rupees, the call is just that you have the promoter selling extinguished, and therefore can that do well. The other small question just before we go to our research team, Parthiv, is on RBL Bank, very volatile. Is there a investment or a trade here?
See, certainly, I feel the condition of RBL Bank is a lot different than that of Yes Bank. A lot of comparison has been taking place in terms of RBL's book being similar to that of Yes Bank. RBL's book having exposure to real estate is not even close to what Yes Bank has. And also the talks about their exposure in Indiabulls housing finance is also very minuscule. Whether if I were to compare in terms of their net worth or their total book size, I think we are very confident that RBL Bank, in terms of its management pedigree and also what they are guiding for, they will be able to mitigate this stock. Yes, the stock has been really badly hammered out of shape, but now quoting at 1.3 times price to book multiple, the management has guided that Q2 growth won't be tepid, even if they are able to achieve 20-25% and able to maintain the NIMs that they have had last few quarters. I think over a gradual period of time, RBL Bank should improve from here, and the worst seems to be over in RBL Bank.
Okay, got that. Just stay on with us, Parthiv. Lots more to discuss with you. We'll talk about the auto space now that the auto sales numbers have come out and what we've made out of that. But I think Yatin will talk about all of those numbers with us. Also some stocks in news this morning with Nikki. Nikki, let's start off with you first.
Sure, a couple of names there. Mahindra and Mahindra. The company is going to be acquiring a 51% stake in the joint venture with Ford Motor subsidiary. It's going to be investing in around 657 crore for this 51% stake and has committed to invest up to 1,400 crore. The transaction is expected to be completed by the mid of 2020. Next in the list, we're looking at Prestige Estates, which is going to be jointly investing with DB Realty Corp to build hotels and convention centers in Delhi. It's going to be investing in around 355 crore for a 50% stake, and the total investment overall for the project is around 2,000 crore. Yes Bank, we've mentioned about it briefly in detail actually, and the next on the list we have Indiabulls Housing, where the company has clarified that now it has no outstanding loans to DLF, Reliance EDAG Group and Americrop Group. Apart from that, it also suggested that loans have been extended to specific project SPVs, and the bank has been, the company has been receiving regular repayments. IndiGo, where the promoters have submitted request for arbitration to London court against the partner. We are also expecting some amount of traction coming in. Actually, a negative development for Hindustan Aeronautics, where the labor unions have gone on an indefinite strike starting October 14 for the demand of their fair and early settlement of wage revision. We have a couple of monthly updates for the month of September. Actually, we have a couple of updates where Apollo Pipes, a good number there, Q2 sales volume up 11%. NMDC again continues to disappoint. We're looking at a 30% downtick in production, 18% downtick in sales. Coal India, well, a record low output there, and the sales, probably that number 20% is at 5 years low, and also some disappointment creeping in from oil, where the company, in light of the demand, has gone ahead and slashed the prices by 5% for a month of September.
All right, Nikki, thanks very much for that. Yazin, auto sales?
Devina, the sales are down, but the silver lining here is that most of the sales are in line with the street expectations. If you look at Tata Motors, a 50% decline coming in there, total sales at close to 32,000 units. More importantly, the company has been making serious efforts to get down the overall dealer inventory, and hence the impact on the wholesale numbers. Eicher Motors continues to disappoint. However, the numbers have been slightly better than the street expectations. Total Royal Enfield sales came in at 59,500 units, a decline of nearly 17% year on year. Similar is the case with Hero MotoCorp, but still better than what the street was anticipating. Sales are down 20% to come in at 6.12 lakh units. However, this is again due to the fact that the dealer inventories are quite high in the two-wheeler space, and most of the two-wheeler companies are controlling their dispatches in order to bring down the channel inventory. And finally, the one which was left is Tata Motors. They came out with the numbers yesterday. The total sales are down nearly 25% to come in at close to 3.15 lakh units versus a level of 4.2 lakh units year on year.
All right, guys, thanks very much for that, both Yatin and Nikki. Parthiv, let's talk a little bit more about these auto sales numbers. You've seen them coming in line with street expectations. There is a road to recovery, a slight amount of green shoots that we are seeing. But is it going to be a slightly prolonged process, according to you?
See, yes, I think, Devina, in terms of the year-on-year numbers, we know that we're really down. Month-on-month improvements certainly tends to give an indication that I think the worst in terms of the base formation of the numbers is probably over. But that is not something which is really going to help the sentiment. We know that we are in a transition and a lot of inventories are still lying and they are having a lot of production cuts. And in order for these companies to sell off these inventories, I think it will take a lot of heavy discounting, which is not going to bode well in terms of the margins that these companies report over the next quarter 2, quarter 3, quarter 4. So I think this year is certainly kind of a washout for a lot of these auto names. In terms of the overall numbers, I think extremely disappointed with what likes of Ashok Leyland and Tata Motors have reported. And certainly sometimes I really tend to wonder why a company like Tata Motors is at all into passenger vehicle segment. I think they're always been struggling despite all the new launches. So I think overall the numbers are still, according to me, really tepid. We might see some sort of positiveness in terms of the auto stocks, in terms of the reaction, but certainly re-rating is away in terms of happening in the short to medium term. Certainly, I think our focus would be more towards the rural-centric growth, which is certainly looking like a revival. What we saw in M&M's tractor numbers, and the rural monsoons and the overall crop harvesting should be really good. So over the next 6 months, I think a lot of these companies like Hero MotoCorp and M&M, which are more rural-centric, should tend to do well.
Okay, let's get in, Parthiv, stay on. Let's get in our technical experts on board to try and talk about how to trade the market in a scenario like this. As we speak, the SGX Nifty is flattened out completely, by the way. It's not moved an inch from the level that it closed at yesterday. Abhijit Phatak, Director at Definedge Solutions, joins us right now on the show. Abhijit, good having you. Thanks much for joining in. What's the positioning that you would do in the session today, Abhijit? The world markets are not that happy a place. How does one approach the Nifty or the Nifty Bank?
Yeah, good morning, Neeraj. Maybe Nifty is correcting the big move which it gave in the last end of September. So if that is the assumption, if one is to make. Secondly, even if the world markets have been tanking even this morning, what I have seen is SGX Nifty has not broken the Friday low today morning as of now. So which means that 11,250 spot, which was the low on Friday, might hold today. And if that holds, so with a stop loss of 11,200, one can buy for intraday. Of course, it is not going to rise fast immediately because a lot of stuck longs will be there at the higher levels. But yes, on buy dip with a stop loss below 11,150 on the spot.
So buy on dips below 11,150. Until then, maybe the slide could continue. What about the Nifty Bank, Abhijit? Because that's been the weaker one relatively and the more volatile one for sure.
Yes, Bank Nifty is a bit of a more volatile, I agree with you, and that has already, the support is very close, 28,500 on the spot, Bank Nifty spot. It has closed at 28,725, so if it does not gap down by more than 200 points, even that can be a long, but stop loss should be 28,300 on the spot.
So you are actually much bullish on the markets currently, Abhijit. You are actually talking about going longs, even at lower levels for the Nifty or the Bank Nifty currently, you are reasonably more bullish than otherwise. In which case, what's the stock-specific approach that you're taking in the session today?
Yeah, I have two longs. One is Maruti and one is Reliance. Reliance has broken out above 1,300, which it was getting registered at, and it might get retested again, which it got retested on Friday. So any dip near 1,300 can be used to go long in Reliance with a stop loss below 1,290. And I expect 1330 or even 1350 on Reliance in maybe couple of days. Second long is Maruti, which has shown quite a good resilience even on Friday. And any dip below 6700 or 6650 on the spot can be used with a stop loss maybe 30-40 points below. and I expect 68.50 in Maruti in the next couple of days.
Okay. Let's also bring in our other technical expert, Sameet Chavan. He is the chief analyst for technical and derivatives at Angel Broking. Sameet, thanks very much for taking out the time on the index. Your quick call on both the Nifty and Bank Nifty, and after the incessant selling that we've seen on the Nifty Bank since the last 3 or 4 trading sessions, is there more downside left?
Hi, morning. In fact, in last couple of days, we have witnessed a decent amount of selling in both these indices, and clearly Bank Nifty is one that has been the major dragger. But now, if you look at it from slightly broader view, a couple of weeks back for Nifty, 11,200, 11,250 was acting as a strong resistance, and with Tuesday's correction, we precisely tested those levels around 11,247, and from there we saw V-shaped recovery. Yes, probably as HX Nifty is indicating, we would open with gap down. But we would expect again 11,200, 250 to act as a support, and from there we would see some kind of buying interest. So in case of index, one can go long at support level. So as long as Nifty is defending 11,200, our bias would be on the positive side, and strategy would be buy and decline. So we would use those dips. On the higher side now, 11,450 would be the level to watch out for. If that levels get broken, then we would again go back to 11,600. For Bank Nifty, which has been a dragger, but we have seen 61.8% retracement, and from there nearly 600-700 points recovery in last 1 hour on Tuesday. So that bodes well for the Bank Nifty as well. But within those two indices, we would definitely prefer a Nifty, which has been showing some strength. As far as individual stocks are concerned, we would remain biased. Our inclination would be on the positive side. First buy would be on Escorts, which has been bucking the trend on Tuesday as well. So we would expect continuation of this outperformance. Stock can head towards 634, 640 over the next few days. So in case of any minor dip, it can be bought into. Stop loss would be around 588. Apart from this, UPL, on Monday we saw decisive breakout happening from this counter from multiple moving averages as well as the major resistance zone. So we expect Tuesday's correction to buy into. One can go long at current level, keep a stop loss around 582, and we would expect UPL again going back to 628, 630 levels.
Okay, Sameet, 2 stocks, Zee. What would you do with this one right now at the current levels? And the other is Godrej Properties. I mean, it started scaling back towards those 1100 levels, but then now I've seen some bit of profit taking, which has brought it back to levels of 983. What would you do with both these stocks?
See, as far as Zee Ent retrenchment is concerned, clearly we have been avoiding this counter since 6 to 7 months. There has been no respite. In case of any rallies, we are clearly seeing selling pressure at higher level, and this is what we have been seeing. So overall trend still remains bearish. In between you could see relief moves, but as long as this stock remains below 300, 320, one should avoid any kind of bottom fishing in this counter, and any bounce back should be used to exit or go short. As far as Godrej Properties is concerned, we have been bullish on this stock, and a couple of weeks back we had a buy call somewhere around 950, 960. It was a short-term call for 8 to 10% move. Stock has already made a high of 1100, and from there in 3 days stock has corrected a bit. But still, the overall bias still remains bullish because we are seeing a series of high top, high bottom formation. So 900, 920 would act as a support. Such dips should be used to go long, and on the higher side 11,050, 11,080, these are the next levels to watch out for.
Parthiv, actually the SL Group stocks, sharp cracks in Tuesday's session. What would you do if you were holding the shares of either Zee or Dish TV?
See, I think Dish TV is something where we've been very negative on Neeraj, even before all this problem regarding the debt burden of the promoter group had, because I think we know this is an industry where I think there could be predatory pricing, and with even Reliance Jio launching its set-top boxes, I think it's going to be a very difficult time, and likes of Dish are also facing the competition from OTT. So I think Dish is a separate case, but yes, feel sorry for Zee Entertainment and its shareholders. It's a quality asset. It's an asset which has been generating a lot of cash flow for the entire group, and it's just because of a huge capital misallocation from the group level. I think it's Zee which has to bear the brunt, and all the selling is taking place. I think the promoters would have exited their entire stake and done it long back ago at higher levels, maybe say at 400, and a new promoter would have taken up, which would have really not made the existing investors see such bleeding in the stock. It's just that it's a crown jewel for the promoter, so they don't want to exit that, but that is really hurting the current shareholders of the company. Hopefully, I think whatever debt that they have to service is off. And what I've heard is that a lot of mutual funds, their cutoff price in terms of the collateral that has been taken is at around 220, 225. So hopefully we don't see the stock lower than that, because I think there could be still a lot more selling from these players if at all the stock were to further go down. So I think it's a sorry state and no fundamentals will work in such a scenario for a stock like Zee Ent.
So, even for the likes of a Dish and Zealand, any of the SL group stocks, you advise staying a bit cautious, Parthiv?
Certainly, David. I think at a point in time where the fundamentals are not going to work and it's more about who comes in and dumps the stock, lock, stock and barrel and causes a panic fall of 10, 20, 30%, I think it's best for the retail investors to stay away from this counter till I think we have more clarity in terms of whether the selling is over or if at all there's an entire change of hands from one promoter to another.
Okay. Abhijit, is there more selling in some of the smaller PSU names? I mean, we've been seeing the Nifty PSU banking index being down, I think, almost 5 to 6% in 2 trading sessions. Would you be a seller in any of the smaller PSU names?
Yeah, there has been a lot of selling, and I mean, most of them are about to retrace the entire move. So selling at this stage will be a bit risky, but on rise, definitely shorts can be looked for with a good stop loss. But definitely no longs in them at this stage because they are not showing any positive structure on the charts. But maybe shorts on rise.
Can you believe it? The SGX Nifty is in the green. Any which ways. But like we've stated now for the last 2 or 3 sessions, at least Monday and Tuesday, then we've been talking to all of you, is that the start really doesn't quite mean anything of the last few days. It's been the second half of trade which has been the more volatile and which has seen some pressure. So it'll be interesting to see if that pressure continues in the session today as well or no. You know, the other set of stocks which have corrected the last few days is cement, and a lot of these have come under pressure. Ultratech, for example, won on Tuesday, session 2 was down about 2.5 or 3% and it's at 4212. So after a bit of a recovery over the last 1 month, the last 2 or 3 sessions haven't been particularly great for some of the cement names. So you've got to watch out for what's happening. Ultratech is one. Some of the others too have corrected quite a bit. Any trades out here, Sameet, Chavan? Cement has been out of favor in terms of the trading parlance, but any stock that stands out for you?
No, I think we have been closely tracking, Heidelberg Cement from the space. Stock has given decisive breakout 3 days back, but considering last 3 days price action, it appears that it was clearly a whipsaw and it was a false signal, and hence we avoided going long in Heidelberg Cement. As far as Ultratech Cement is concerned, yes, the overall structure still remain bullish because last Friday the stock managed to surpass its 200-day moving average, then a follow-up move, and in last 4-5 days stock has been consolidating. So on Tuesday the correction precisely got retested around 200-day moving average. So one has to see how this stock behaves around 4100, 4050. In case if we have to go long, we would rather wait for a breakout to happen in the upward direction. So 4400 is the level to watch out for. If the stock managed to surpass this, then yes, we could see a good move probably towards 4650, 4700.
Okay. Got that. 30 seconds left to go for market pre-open. Remember, you're going to be watching out for what happens to the bond yields as well, which have been coming off recently. There is an expectation tomorrow is the monetary policy announcement. The Bloomberg consensus believes that it's a 25 basis point cut that's probably going to come in with regards to what we have, and the repo rate could be at a decadal low of about 5.15. We've seen the bond yields coming off. I think 6.66 odd is where we have the bond yields as of Tuesday's close, but we'll watch out for that as well, and the rest of the banking pack. Nifty 50 opens with a muted performance, I think down about 12 odd points at pre-open. Sensex is up in the green about 0.5%, but individual counters to see some moves, and starting off first with what's happening in the auto pack. I think Tata Motors is the top loser right now. It's down about 7 odd percent. Following that, you have ONGC, which is down 3%. Tech Mahindra is down 3%. Bajaj Finserv, UPL, SBI are some of your key drags in trade today. HDFC Bank too looks weak, 1% under. Bajaj Finance, that's weaker as well. HCL Tech down 1%. Vedanta, L&T. L&T is now at 1452 and Infi 2 about 0.5%. Amongst the gainers, which are fewer, you have Titan, which continues to do well, and this one's actually been the bedrock right now of this move with regards to at least some consumption names which have done well. M&M, ICICI Bank is at 428. Then you've got ITC, which is up, and Yes Bank, some overhang which gets removed. The stock's up about 10% For the currency, there's some amount of depreciation that you're seeing this morning. 71.25 is what you've got the rupee trading at in the first tick. The bond market yields may take a minute or so to come. So once they come, we'll take a check on that.
That'll be interesting with the policy slated to come out tomorrow. What happens to the yields in the run-up to that? Maybe a bit quiet in the run-up to that, and then depending on the rate action, we'll get to know more about it. I want to see what Dish TV is up to. I want to see what Indiabulls Housing Finance is up to. Both of these names very volatile in Tuesday's session. I was about to say Friday, Tuesday's session. Indiabulls Housing Finance volatile even now, 6.5%. Interglobe Aviation, and I would want Parthiv's view on that, but Interglobe Aviation at 1725 is down about 7.5%. The promoter entities, which is the company and Rahul Bhatia, have taken the arbitration to London against Gangwal, so let's wait and watch. Clearly, no signs of any kind of easing of tension, never mind what happened in the board meeting and the comments that came out there. 1700 on the tick on Interglobe Aviation right now. This will change, of course, but that looks slightly wobbly as well, so do watch out for that one. Indiabulls Ventures continues to drag lower. I believe real estate too should be lower, so watch out for both of those names as well. Very important to monitor. Lastly, RBL Bank, very volatile stock, was down 18% at a point of time in Tuesday's session, ended up 6% for now, marginally in the green. Let's wait and watch what happens there. Before we get back to our guest, Sameet Sarkar is here with the top brokerage calls for the day. Sameet, good morning.
Good morning, Neeraj. On the top brokerage calls for the day, first we have is Morgan Stanley on the oil marketing companies. Now, according to the brokerage, a potential divestment of BPCL, if done well, could re-rate the sector and unlock nearly 15 to 25 billion US dollars of value for the fuel marketers, considering their dominance in the fastest growing energy market. Now, BPCL could attract focus from global oil majors with opportunity for them to get closer to the end consumers. Now, the sale to a non-state-owned company could significantly re-rate the sector multiples as government intervention risk reduces and improves the marketing margin along with cost efficiencies for the oil marketing companies in the medium term, says the brokerage. And in the back of this, the brokerage has upgraded its rating on BPCL to overweight from an equal weight rating and has hiked the target price to 571 rupees from 427. For Indian Oil Corporation, they have maintained their overweight rating but have cut the target price to 179, and for HPCL, they have maintained the overweight rating and have hiked the target price to 398 rupees. The second one is on Investec on gold financiers. Now, according to the brokerage, gold finance is stabilizing after a volatile past. Now, this is driven by a rise in gold prices and the NBFC liquidity issues. Now, the gold financiers are the most profitable NBFC segment but lack growth prospects, and hence they are choosing to deploy capital in new segments like housing, microfinance and vehicle finance, says the brokerage. Now, for Muthoot Finance, they have initiated a buy rating with a target price of 770 rupees, while for Manappuram Finance, they have initiated a hold rating with a target price of 140 rupees. Now, it says that Muthoot Finance is better placed compared to Manappuram Finance due to its competitive advantage, better growth prospects and diversification plans that it has in place so far.
Right. Sameet, thanks very much for that. That's a few brokerage calls this morning. And in Interglobe Aviation, an interesting one. When they had their quarter one conference call at that time as well, Rakesh Gangwal was missing from the conference call. So, before that, it looked like there could be, both promoters having some middle ground, meeting at a middle ground. But Rakesh Gangwal missing from the conference call was something that raised questions even then. And then now you have, final, nail that's been put in with regards to this arbitration, and irrespective of the operational performance, near-term headwinds because of this particular tiff that's there between the promoters is definitely going to weigh down heavy on the stock as well. But Sameet Chavan, and if you haven't got a technical perspective from him yet on Interglobe Aviation, Sameet, what would you do with the stock?
Clearly, this stock has been one of the outperforming stocks in the recent past. We have seen no major correction in this counter. In fact, stock has managed to surpass its previous hurdles in trading at all-time highs, so uncharted territory. So on the higher side, if I have to see any particular level, the 1950, 1920, these are the next levels to watch out for. And on the low side, 1750, which was the previous resistance, would now act as support. So in case of a dip, one can go long. And as of now, there is no trade setup at current juncture, but in case of a dip, one can go long. And those who have bought it at low level, they should certainly stay put, keep a stop loss now, revised stop loss somewhere around 1800.
Parthiv, fundamentally, it's been an outperformer as the charts of course show, but this whole arbitration in London, will this put an overhang on the stock or will it continue to defy these overhangs?
See, Neeraj, my sense is that the stock has done well on a back of very good fundamentals, and we have seen the crude oil prices after the Saudi Aramco drone strike really cool off. So that is always soothing in terms of the operational performance. But I've always believed that whenever there is such sort of spat, which one thought that it was almost over until last quarter, but now again all has erupted again. This will not really help use the current promoters' energy in terms of their expansion of the routes, especially the international routes. I think it does take a toll, despite howsoever we may say it's a professionally run company, etc. So my sense is the stock has had a massive run. It is very, very expensive in terms of valuations. So not a bad idea to, I think, exit your profits from Interglobe Aviation. And if at all one wants to stick to aviation, then in which case I think the second best stock, which is SpiceJet, I think looks better in terms of the long-term prospects, and they are the ones who are going to take a lot of advantage of any such slowdown in terms of expansion of Interglobe's route, if at all any. And also they've already taken a lot of advantage in terms of the debacle that we saw with Jet Airways. So SpiceJet is also extremely well placed, and they will also have all the benefits of the lower crude and the new fleet joining their fleet.
By the way, as the pre-open rates are settling down, I must say, Yes Bank is starting off well. I know we asked Parthiv this question, but that point of time, the call was that it's a 30 rupee call. Now, it might be a 35 rupees call. Parthiv at 35 on a Yes Bank, purely from a trader stroke investor or a high-risk investor or a high-risk trader mentality, going long or staying away?
See, I think, Neeraj, what we discussed, that if at all, Mr. Gill has been very vocal that there has been no change in terms of slippage of guidance in terms of the credit cost that he has been talking about since the last 2 quarters. There's been no change in terms of any major new account creating any problems in terms of the bank's asset quality. So right now, I think the problem is they did raise some funds at around 85, 86, and there were credible names who had come at those levels. If at all he is on the lookout to raise more funds, he certainly can't do it here because he has to first justify the investment done by the guys who entered at 85. So if at all his Q2 numbers don't look as bad as what the street is probably trying to pencil in, and if at all that is being trusted by the market, we might see a huge spike in this stock. That is when the morning when we discussed, I was just mentioning that if at all somebody wants to take a risk and wants to invest in Yes Bank, one will have to calculate the risk appetite and consider this to be a call option with unlimited expiry, which can be very rewarding if things work in our favor.
I also want to talk a bit about NMDC and Coal India. But first off, let me just quickly get in some chart checks going. Sameet, Chavan, do you track NMDC?
See, of late, we have been avoiding this counter considering its volatile moves, but Tuesday's price action was quite encouraging. Although stock is yet to confirm its breakout from 200-day moving average placed around 96, 97. So if this move has to extend from here, stock needs to surpass 97 on a sustainable basis. So if that happens, then yes, again we could see the stock heading towards 108, 110. So if I have to go long in this counter, I'll wait for a breakout to happen beyond 97, 98.
Okay. Remember, just on Tuesday, towards the end of the trading session, the stock actually rallied closer to 8% on the back of some changes made by the government in the mineral rules, which replaced the word may to the word shall. So now there is no, overhang with regards to whether or not the Karnataka government can indeed renew the Donimalai mines leasing agreement with NMDC. So that overhang goes out of the way, and the stock moved up about 8.5%. We'll ask Parthiv about this as well, but we're just minutes away from market opening, so we'll tell you all that you need to know to stay ahead and trade today. Yes Bank says that Tuesday's steep fall in share prices was due to an invocation of shares pledged by Rana Kapoor's Morgan Credits. Kapoor's stake now stands below 1%.
M&M will invest 650 crore rupees in a joint venture with Ford to develop, market and distribute vehicles across India and other emerging markets. M&M will own 51% stake in the venture.
Prestige Estates will jointly invest with DB Realty Group to build hotel and convention centers in Delhi's Aero City company to invest 355 crore rupees for 50% stake in the joint venture, with a total investment for the project estimated at 2,000 crore rupees.
Promoters of Interglobe Enterprises, which is Interglobe Enterprises and Rahul Bhatia, have submitted requests for arbitration to London court against partner Rakesh Gangwal.
Indiabulls Housing Finance clarifies that it has no outstanding loans to DLF, Reliance ADAG Group and AmeriCorp Group, and that loans given to Vatika Group are secured against mortgage of land and property.
Lastly, Care Ratings revises JSW Steel outlook to negative from stable. The revision is due to slowdown in the steel sector, which may impact profitability. You know, I want a high risk, it's a high risk stock, but it's been very volatile as well. And Abhijit Phatak, which is why I'm just wondering if somebody is trying to trade Indiabulls Housing Finance after the 40% downtick until midway Tuesday, then a 10% uptick, and then a 3% uptick today as well. What would you advise?
You mean going long in Indiabulls or?
I'm asking, what would you advise for somebody who wants to trade Indiabulls Housing Finance?
It can be a good long, as long as it is sustaining 280 on the futures. It can give a pullback towards 300 or even 330. But 280 on the futures was a resistance even on Thursday and on Friday. So if it sustains 280, it can give a good rise above 300.
Remember, it's still very risky because, you know, as per the Bloomberg news, which we'd spoken about a few days ago, there is still that probe that is happening within all of these three Indiabulls group stocks. So Indiabulls Housing Finance, Indiabulls Ventures and Indiabulls Real Estate with regards to some corporate governance issues. So the Ministry of Corporate Affairs is looking into this. They're going to reveal their findings at the end of this month. So it's still going to be a slightly more volatile period.
No, you hit the nail on the head. Remember, that's a Bloomberg exclusive story as well that we did on Tuesday. But I know they wanted to ask Parthiv about this. Parthiv, very quickly, a minute answer. NMDC and the development that's happened on Tuesday, what would you advise on the stock?
Certainly, Neeraj, it's a positive development, and as a result of it, the stock has moved up from its lows. But my problem with these companies is their worst capital allocation strategies. I think they put up a 3 million ton steel plant, which has been delayed endlessly. Now, instead of this year, they're talking about it getting commissioned in June 2020. And I think not only that, there are huge cost overruns of almost 6,000, 7,000 crores. And we know for the fact that a steel plant, which is new greenfield project, takes a lot of time to ramp up. And with such capital allocation and such strategy that the companies adopted, I think they are not willing to sell it. Once, I think when they were talking about selling the asset for 16,000, 70,000 crore, I think that was a very good news for the shareholders. But now they've been asked or they're planning to keep it. I think these are not the type of companies which will create wealth for the shareholders, despite howsoever monopolistic position they might be in and howsoever cash rich they may be. But NMDC is not the stock that would like to buy.
Okay, got that. I think we're a minute away from market opening. Quick top calls from both our technical experts. Abhijit, why don't we start off with you?
Yeah, like I said, if 11,300, I mean the 310, which was the low on Friday, is not broken, one should look for intraday longs.
Okay, and Sameet, what about you? Any stock that you would have a top call on?
Yeah, I'll certainly go with the Scots, which has been opening with a nearly 1% downside gap. So it's a good buy considering the risk to reward ratio. One can go long in a Scots. 588 would be my stop loss level and target would be around 634.
Abhijit, is there a stock call that you would have, a top stock call?
Yeah, Maruti. In fact, Maruti has, although it has been a bearish stock for the last many months, and still negative news keeps pouring in, but on the chart it is showing some kind of resilience. So, like I said, it can be a buy near 6,700 if it gaps down, and I'm expecting 6,850 or even 6,900 in the next, maybe in the month of October.
Gentlemen, Abhijit, Sameet, as well as Parthiv, thank you so much for joining in today and giving us your thoughts and your advice on trade. This is how the markets are starting off this Thursday morning in the red. So the SGX Nifty turned out to be deceptive yet again, but this shouldn't surprise people because the world markets have been in a bit of a tizzy the last couple of days, and therefore this is on anticipated lines, I would believe. 250 points for the Nifty Bank, down almost 1%. Actually, the Nifty and the Sensex too about 0.7 or 0.8%. 300 points for the Sensex, 91 points points for the Nifty. It's not a good start. The mid-caps, from a bull's perspective that is, the mid-cap and the small-cap indices too would have started off in the red. The mid-caps about 66 points or 0.4%. The BSE small-cap index flat for now, but usually it tends to then start moving very, very aggressively in the second half. So let's wait and watch what happens, but not a good start. The heat map on the Nifty will show you that more red than green, I'm sure. No surprise there. What is doing well though? Let me start off with that. Yes Bank is up 10% and it's staying there. Let's wait and watch what happens. The rates will change very shortly. IOC about 1.5%. Hero Motor Corp about 1% or thereabouts. BPCL about 0.75%. So those are 3 or 4 names in the green. What is not doing well? Vedanta 2.5%, Hindalco about a couple of percentage points. I guess the US economic data impact out here. All base metals, crude, etc. have all come off in the last couple of days. So not surprised that these stocks have done what they've done. Bharti is down about a couple of percentage points. It's giving up a lot of the gains that it had on Monday on anticipation of some or rumors of some tariff hikes. But the last 2 days it's been slightly wobbly. Coal India, Tech Mahindra, no big cuts really. A clutch of names falling anywhere between 1.5% to 2.5%. We don't have a really large loser on the Nifty in the session today. Maybe the broader markets have that. Very quickly, a couple of pockets that I want to highlight before I hand it over to Devina. What's happening to the SL Group stocks? What's happening to Zee? What's happening to Dish? Let's see. It was a bad day in Tuesday's session, but in today's session, both of these are seeing some signs of stability. 0.5%, not much, but some sign of stability. And then stocks which are trading near 52-week highs on Tuesday's session as well in a volatile market. Let's see what they are doing. Mass Financial starts off about 1% lower, but Abbott India as well as IIFL Wealth in the green. So some stocks continue to do well. Devina, what are you spotting?
Start off with the, Religare, which is up about 5%. Then you've got the likes of CG Power, which has moved up in today's session after, the continuous selling that you've seen in the stock. RBL Bank as well, that's up about 2.5%. Info Edge moves up in today's trade about 2.5%. Indiabulls Housing Finance, I don't know if you've already covered it, but that stock in the session is also up about 1.92%. DLF continues to do well. You've got the likes of an HPCL following suit with what the rest of the oil marketing companies are doing. Trent, MRPL, 1% higher for each of these names. And then you've got Inox Leisure, 1.25% higher, that's at 333. Cholamandalam, Snowman Logistics, and some of the banks are all recovering in today's session. So the likes of a Corporation Bank, and then you've got, Union Bank, from the PSU lot as well, which are holding out. IOB is the other one that's looking okay in the session. Union Bank's down about 0.25%. I think IOB is up about 1% in the session. Aside from that, with regards to the losers, Divan Housing Finance continues to remain under pressure. Future Consumers down 5%. Indiabulls Real Estate, though, has not managed to buck the trend for Indiabulls Housing Finance has been doing, so that's down about 5%. And the other one is Indiabulls Ventures. If you have that also up, then we can get a sense of what's happening there. 1.4% higher. Kolte Patil, Interglobe Aviation, and some of the other names which are looking weak in the session. So all in all, it's a slower start. 800 stocks are declining from the broader market space. The breadth is extremely narrow. 297 stocks have traded in the green this morning.
Vetri Subramaniam, Group President and Head of Equity at UTI AMC, joins us right now on the show. Vetri, good having you. Thanks much for joining it. Good morning, Neeraj here. How are you approaching the whole...
Hi, Neeraj. Thanks for having me.
No, pleasure is ours. How are you approaching this whole investment process in the light of the fact that while we've had the government on overdrive, the scare around the damage that financials and the exposure that they have to some susceptible sectors still continues?
Well, I mean, both are the realities, so there's not much you can do about it. I think there was a sentiment in the market maybe going back about 6 or 8 weeks, particularly closer to the point of when the budget was presented, where there was a sense of, people were feeling a little bit more gloomy about things, demand was weak, and there was a sense that the government wasn't really listening to some of the issues that businesses were actually facing. But I think in the last 6 weeks, the government has sort of, incrementally come out with various measures, various steps to address some of the pain points. And I would say that the big step that they took on the corporate tax rate 10 days ago was, sort of unexpected, because that wasn't really among the issues that were being discussed in terms of what needed to be done in the short term. So I think it's good because it gives the markets and importantly businessmen the sense that the government is listening and the government is responding. But what you also said is true, which is that we've had continuing issues in the non-bank space going back almost a year now, and I think it is a bit of a disappointment that we've not been able to get our hands around this problem. More and more financial institutions are getting sucked into it. There is an element of distrust in the markets, and while some would argue that credit is still available and bank-to-bank transactions are not affected, I think the insight and the inputs that we get from companies suggest that there is a severe curtailment of credit which is available at the ground level, and secondly, there is a sort of freezing up of the bond market, and for non-banks, if you cannot roll over your liabilities, then the distance between what is a liquidity rollover problem or a liability rollover problem and something which then escalates into a solvency challenge is actually a very short distance. So I think that is an area which still needs to be addressed.
What would your belief be that we will escape that, and therefore are you more bullish than bearish right now, or is it the other way around?
Well, there's always good and bad. I don't think there's only one sentiment in the market. So, particularly I'm of the opinion that, the good and the bad and the yin and the yang, they both coexist. So I think it's good that some of the steps that the government has taken in recent time, they will help stabilize the economic platform. They set up on a trajectory for much stronger growth sometime in the future. But, in terms of getting out of the recent sort of downturn in growth, I'm afraid that till the credit issues are addressed, you actually have a potential downside risk to growth stemming from these issues rather than an upside risk.
All right. Vetri, while obviously we've been talking about, the foundation being laid now to the next move, the next few years of growth that the government has been vying for, do you feel the numbers adding up? Because obviously, again, with the fiscal risk that you run right now, it's not going to be that easy to get foreign investors to be excited about a market like India. Earnings are not picking up yet. And, then again, going back to the fiscal risk that you run.
I think we have to be a bit, careful about here. Are we discussing the stock market or are we discussing the economy? The stock market, like it or not, can get manic depressive at times in both directions. So I think that's the wrong target audience to, excessively focus on. I think as far as the real economy is concerned, some of the policy steps that the government has taken may be late, that could have been done earlier, but I do think these are positive steps, and I think it creates an environment which we need, which is to essentially incentivize investment. And I think, just looking at this corporate tax rate cut that the government did, what is it really all about? It's really about leaving money in the hands of the people who actually take the active decisions in the economy in terms of should they invest more, should they hire more people, what should they produce which the consumers will actually attach and value to, and you've actually left money in their hands. You've sort of helped recapitalize their balance sheets to some extent. So I think that is certainly a long-term structural positive, and from the point of view of India always needing to attract large amounts of foreign capital by way of FDI, I think just as a headline measure, saying that we've brought our tax rates down to make it competitive vis-a-vis other geographies, I think this was really the crying need of the moment, and I think this was fine-tuned quite well ahead of the Prime Minister traveling to the US and talking to big businesses. But certainly there's no one magic bullet which solves our problem, and I think that's the thought process with which we need to work with, that we have a lot of things which will help us create a much larger economy than where we are today, but it's about executing on a daily basis. That is how you actually get to your destination.
So just trying to understand from you, Vetri, from a stock market standpoint, why hasn't this excited foreign investors? There's still a way. A budget was, a disappointment for them, but all of that has been reversed. Measures have been put into place to make things more clear for them in terms of routes that they can invest through, caps that they have. So what's keeping them at bay?
Well, I think you have to go back in history over here. Remember that there was a fair bit of excitement going back all the way to 2014 that, we were going to see a very dramatic change in the direction of policy making and the kind of policies, and, I think the turn to the right has not been as dramatic as what people had hoped for, and you're actually dealing now with the burden of expectations which go back 5 years. So you can't turn that around with just, one day of announcements. And for people who've, been investing in this market for many years in the hope that growth will accelerate, the government will, demonstrate a clear pro-growth agenda, one announcement by itself does not necessarily change that perception. And, I'm sure some of them would have a sentiment which says, show me the money and then we'll turn up. Also keep in mind that, Indian valuations, while they have dropped, I would say, into a little bit of a comfort zone compared to valuations which were quite elevated, perhaps sometime in 17 and 2018, are not really bargain basement cheap, neither compared to the rest of the world and neither compared to our own history. If you go back and look at India's own history of valuations at various pressure points in the past, be it 2013 or you even go back 14-15 years, valuations have gone much lower than where we are today. So it's not like valuations are really, crying out that there's a lifetime opportunity available in Indian stocks. We're still reasonably valued, in the comfort zone arguably. Not as expensive as we were 18 months ago, but not bargain basement cheap either. So I think we are, focusing on the wrong problem here by saying, why didn't this, particularly policy measure result in foreigners sort of turning around and coming back in droves? No, it will take time, and you're dealing with, expectations that have been belied.
What will get the thing going then, Vetri? Because if indeed the corporate tax cuts are to take effect and the bottom line numbers show, then you might actually have some bit of EPS revival this year itself, and in which case the headline indices may not necessarily correct. So we will not become bargain basement cheap in any fashion whatsoever. What gets people going? DIs like you are buying in, and every single day we see that number. But the foreign interest, will it come back only when the global issues get resolved?
I'm sure the global issues are, one of the challenges that are there, and, that is something which will play a role. But just to go back to, where you started this in terms of, the earnings numbers and valuations. Well, funnily enough, actually, the earnings estimates, at least on the Bloomberg consensus, have actually not moved up by much post this tax cut. Now, back of the envelope, we do think that there would be a positive impact on Nifty EPS, ceteris paribus, everything else being equal, and you could debate whether it is 6% or 8%, but somewhere in that range. But I think also keep in mind that over time, it's not that every company will manage to retain this benefit. It is not that every industry will manage to retain this benefit. It's an exogenous change. In many cases, companies may choose to pass this on to consumers, which could help revive demand, but may not necessarily show up in EPS. So it's a bit funny that actually I've not seen the consensus EPS number on Bloomberg go up, though back of the envelope it should have. I think the benefit will be retained by certain companies, but not so easily by many other companies. And what is that a function of? It's really a function of the comparative dynamics of the industry, of the individual company, and their ability to retain this benefit, as well as the conscious choice that they make. Do they choose to pass on some of this benefit to the customer because they know that this additional cash is anyway going to stay with them? Do they choose to say, no, we'll keep our margins where they are, but we'll invest for our next leg of growth? So it's hard to sort of translate this into a 100% certainty on what the impact on aggregate earnings will actually be. But yes, certainly it has a positive impact on cash flows accruing to shareholders, because the government's stake out of the earnings is coming down, and therefore the option is now with the owners of the companies and with the shareholders to decide where to deploy this capital. I would also add that keep in mind that in a way a tax cut is very similar to a reduction in the cost of capital as far as the cash flows to shareholders are concerned. So I think it will have a longer term positive impact, but My simple point being, don't focus excessively on, oh, we got this EPS benefit, so why isn't the market reacting to it? I think that's just the first level of thinking. You need to go deeper in terms of which companies can retain, which cannot retain, and how it will impact their decision making in terms of how they plan for the future in investing, in hiring, and a decision to pass on some of the benefits to consumers.
All right. We leave it at that, Vetri. It was great conversing with you this morning and getting your thoughts after really, some time that you've joined us, and hope we don't have to wait this long to get you back on board again. Thank you so very much. The markets for themselves holding a cut of about 0.5% on the Nifty, with the banks bleeding a bit more, close to about 0.75%. We're going to take a very short break right here, but on the other side of this break, a very special chat with Pawan Goenka of M&M and Jim Farley of Ford about their joint venture and how is CLSA valuing Indian equities. We speak to the India strategist Mahesh Nandurkar.